Dex's Effects again, and I'm here to show you something really simple that works for me. It's been working and I feel I should share it to you. Trust me, after learning this, you wouldn't be needing your MT5 again. You wouldn't be needing your trading view again. A lot of people come up with strategies, come up with setups, come up with analysis, and sometimes it becomes too ambiguous, becomes too bogus, becomes too complicated for even the layman to understand. But I have come with something very simple, something very unique, something very, very interesting. So just sit tight and watch what I'm about to show you. I'm going to show you how to a simple strategy that works using your MetaTrader 5. You wouldn't even be needing this indicators at the end of the day, but I'm just adding it here for extra confluence. So now, if you're asking, the indicator I use is EMA 50, exponential moving average 50. So now let's get to it. Now I trade break and retest, support resistance. Coming to my daily, you see I'm already on daily. It's really simple. Now, I would want to trade alongside the trend, right? I want to understand what the trend is doing at this moment. So when the trend is a downtrend, how do I spot the downtrend, right? I'm going to be showing you how to spot a downtrend in my next video. But for now, I'm going to show you what I want to show you, which is the break and retest strategy. Right now, we are in a downtrend. I'm going to explain further when I do another video explaining how to spot clean trends, how to understand the trend of the market. Now, looking at this was our previous high, right? It's a very clean support and resistance. You already know break and retest, right? The price breaks the previous structure and retest that structure. Now, what was the previous structure? This was the previous structure. This was the previous structure. We saw the price buy up and then came up here. It formed the structure. If you draw this line down, you see that it was a series of structures. So this is a valid structure, right? Now, we had a buy. This was another structure. The price couldn't break that structure. It dropped. Now, we don't trade this. We trade the retest of this structure. How do I trade it? We wait for a retest. That's the retest. This is on daily, right? A retest, the price breaks out of the structure, buys back into the structure, and then boom, it drops, right? So I'm going to be explaining this, and then I'm going to be analyzing the next price, and then we see what we want to see out of it. So basically, we've spotted the trend, right? The trend is now a downtrend. Why? Because it's broken out of this structure. It's broken out of several structures here. We had structures here, we had structures here. I don't want to be drawing everything so it doesn't make the chart look messy, but we had structures here, we had structures here, we had structures here, we had structures here, and now this price broke below all of these structures and then decided to retest here. This is where it gets interesting. You see, it's retested, and the moving average also is above it, giving us a sell entry. Like I said, the moving average is just for extra confluence. Now, let's get to it. Going down to the 4-hour time frame. All right, sorry. Let's get to 1 hour this sometime, so we could spot easily where. Yeah, this is the daily time frame. This is the daily, and this is where it started. So let's go down to 4 hour and spot where it started. All right, fine and good. This is where it started, right? This is where the next day's candle started. So how do we trade it? Let me take it out for. We noticed the price was inside here, right? The price kept dancing inside of this structure. I wanted the price to like come into here. This is the valid point, right? This is the valid point here, right? I want the price to come in there and, give us a reason to take this trade. So now, starting of the next day's candle. The price started, moved here, and then finished with a rejection. Look at that. Look at this. Look at this candle. It was a rejection candle, right? The price started and then started buying and buying and buying. It bought up to this point. It bought up to this point and then rejected it. If you look at it, there was a rejection, right? Now, if I want to make it more clear, we'll go down to the 1 hour and see how clear that. All right. Sorry, can I do that again down here? All right. So let's move it here for now. This is where that price started, right? This is where that bias started. 1, 2, 3, 4. This was the rejection. So this is where the price ended. This is where it started. It started here, somewhere here, and then ended there. 4 hours, right? Now, I want to take this. I'm interested in this sale because, right, the price is below the structure. The price is below the structure. Again, if I had taken the sale from here, I wouldn't be wrong. If I had taken the sale from here, I still wouldn't be wrong. But I wanted the price to go into the structure clearly so that it helps me reduce my risk. That is my stop loss entry. I mean, if I took the trade here, certainly my stop loss would be above the structure, right? But if I take my stop loss here, if I take my trade here and then the stop loss is still above here, that's minimal risk with chances of making better profits. So which would I rather choose? I'd rather choose to allow the trade go into the structure clearly and then give me a reason to pick a to pick a sell. So now, we had the price moving to the structure. This was the 4 hours. This is where the 4 hours ended. All right. I wanted to see a bearish engulfing. I want to see a rejection candle. I want to see a reason. I just want to have a reason to take this trade. All right. So I came here. The price was inside of the structure. Finished. Price finished with a rejection candle. Price finished with a rejection candle. And then we go down to, say, 30 minutes. This is 30 minutes, right? This is our entry time frame now. This was that 1 hour I was talking about, right? Finished here. Finished with another rejection. I decided to take a trade from here. Or I could decide to just wait to see this. Either of the two, I'm still correct, all right? It's not like I'm wrong. I take this trade. I take this sell here. Set my stop loss above the structure. Above the structure. Set my stop loss above the structure. Now, what do I mean above the structure? Above where the candle wicks had ever reached. Like looking at all this here, all these points, we've not had a wick higher than 3336. So if I'm taking this trade from here, I could set my stop loss there. Let's see if we could do something. To set my stop loss here, somewhere here. And this is my entry. This is my entry. Alright. Now I allowed the 30 minutes to finish. That's for the next candle, this to finish, and then I took my trade here. Even if I took it here at the very start of this, I still wouldn't be wrong, like I said. Now, my take profits, so I like setting my take profit at the bottom of where the rejection standard and the rejection started, right? So something like this. Now let's go to 4 hours and see how ideal that would have been. You see, had my entry here, had my stop loss above, and then had my TP, my take profit here. That would have been a very nice, clean setup. All right. Already, we know that this trend is a downtrend. So what are we looking for? More break and retest sales. Now, this was the first retest that happened on the daily, right? This was the first retest that happened on the daily. We are correct. The next one, we had another price reject and then retest here. Now we go down to 4 hours. Look, we are clear on this one, right? We're clear on this setup, right? You can watch the video again. Now we want another retest. We want another retest of the 4 hour moving average to then take a sell down to here. Like, I'm using only gold to explain, because personally I use it on gold. I use this strategy on gold. It works perfectly on gold. I haven't tried using it on other pairs, but the reason I haven't used it is because other pairs are not very as volatile as the gold is. Gold is so volatile that each little move gives you so much profit. So why not use it? All right. So now we got to 4 hour. We got a retest. We got another retest of this structure. My previous exit has now become my new entry model. Now we do the same thing. It's really simple, really that simple, right? Let's look for it. All right, perfect. All right, so this is where the 4 hours started, right? 1, 2, 3, 4. Let's go down here. Let's go back and see here. I could decide to take it here, or I could have decided to take it here. So let's go here and see. Let's be real right now. I wanted the price to, finish off in that structure. So 1, 2, 3, 4. The price finished in that structure, right? This was that 4 hours. This is where it ended. Now the next 4 hours started here. I wanted to see what would become of this, so I go down to my 30 minutes because I'm looking for my entries now. Now you see that 4 hour, he already gave us a dodgy candle, which is telling us that the bears are interested in picking a sell on this market. This is how structures are formed. When price gets into a structure, you want to see what the investors, the big boys, are doing at that structure. That is what is going to determine how your strategy is going to move, what you're going to do. Now, I could look at my 4 hour time frame and suspect that, this price is not going to retest here, right? This price, no, it's not going to retest. It's going to break above and keep going up. All right. Today's NFP. So anything could happen. I'm saying this because I want to come back to that later. So your strategy should try as much as possible to avoid news, so you don't get wicked out. Now, I would have taken my entry here. It's really that simple. Really that simple. Mind you, our stop loss is always above the structure. Always above the structure. Always above the structure. Now, this is where the last candle stopped, 3314. We take our SL somewhere here, 3316. Our TP, as usual, is going to be here. Our TP is going to be here. So, I took this sell and I'm planning to write the sell down here. But mind you, I don't trade news. I don't trade when there is news. I don't trade on NFP days. because NFP, the market could be very, very manipulative. You could be seeing a sell, but then a week could just weak you out and then continue to sell. Or it could just, it's not ideal to trade when there is news because anything can happen at that time. So now, without the news, say, oh, I want to take this trade. I'm very, very interested in this trade. This is where I would have taken my entry and then write it down here. How many pips would that be? Let's see. That would be $400 pips. It's about 400, right? About 400. About 400 pips. That's if I'm not wrong. And imagine risking 70 pips, 70, 80 pips to make 400. Very, very cute. So, I'm not trying to make this video too long, but you already see what I'm saying. Now, if you want to take this trade again, it's simple. Just wait for the price to break out, retest this structure to then sell. So now watch out for my next video on how to spot trends of the market when the trend of the market starts. Right? So you start looking for your trades right from the start of the market. You're not trading against the trend, you're not against anything. So stay tuned as I'm going to be dropping another video to explain how to spot clear trends when the market's about to change its trend. So if you have not subscribed to my video, please subscribe, like, and share this video and make sure it gets to as many people as possible. Thank you. See you.